Most people look at the price of a single Bitcoin and instantly accept defeat. They believe the ship has sailed, convinced that unless they can afford a whole coin, there is no point in starting at all. This psychological trap, known as unit bias, is exactly what keeps the masses tethered to a failing fiat system. While you wait for a fortune to invest, your opportunity to escape financial slavery is quietly slipping away, reserved only for those who can see past the arbitrary number on the screen. The reality is that owning just 0.1 Bitcoin is enough to position you within the global economic elite. You do not need to be a millionaire to secure your future. You simply need to understand the math of absolute scarcity before the rest of the world catches up. In this breakdown, we will dissect 4 critical pillars explaining why this fraction is your gateway to freedom. By the end, you will see that the size of your stack matters less than the timing of your entry. It is easy to feel paralyzed when you look at the ticker and see a price tag that rivals a luxury car or a down payment on a house. You might think that unless you have tens of thousands of dollars ready to deploy, the game is simply not for you. This hesitation is natural, but it is built on a fundamental misunderstanding of what you are actually buying. The market has trained you to think in whole units, yet that is the very mental block preventing you from taking the first step. Here is the reality that changes the equation. Bitcoin was never designed to be a monolithic block you must purchase entirely. It is composed of 100 million smaller units called satoshis. Just as a dollar is made of 100 cents, one Bitcoin is simply a container for these millions of fractions. The high price per coin is irrelevant to your participation. You are not trying to buy the whole network, you are securing your share of the protocol, regardless of the size. Think of it this way: if you wanted to save in gold, you wouldn't refuse a small coin just because you couldn't afford a massive delivery bar. You would simply accumulate grams. Bitcoin works exactly the same way, but with digital precision. A mere 10 or 100 euros isn't a waste of time. It equates to thousands of satoshis. These are digital seeds. You don't need to own the entire forest on day one. You just need to start planting the trees you can afford right now. When you shift focus from buying a Bitcoin to stacking satoshis, the pressure dissolves. You stop waiting for a windfall and start acting today. This is crucial because in a deflationary system, time is the most expensive asset you can waste. While others sit on the sidelines complaining about the price, you are quietly building a position. The market doesn't care how much you buy at once, only that you are actually in the vehicle moving forward before it speeds up. So, the strategy is simple: ignore the unit bias and respect the accumulation process. Whether it is 50 euros a week or a lump sum, every Satoshi you acquire is wealth transferred from a dying system into your personal vault. You are moving from zero to non-zero, and that is the most important jump you will ever make. Once you begin to accumulate these fractions, you must understand exactly how rare they truly are, because the math behind their supply is what guarantees their future power. We live in a world of infinite reproduction, which makes it difficult to recognize true value. You are used to seeing governments print trillions of dollars out of thin air or companies flooding the market with new shares whenever they need capital. Because of this, absolute scarcity feels foreign to us. You might look at a fraction like 0.1 Bitcoin and think it is insignificant, mere crumbs on the floor. But this feeling is a deception created by an inflationary environment. You must reset your baseline. Let's look at the cold mathematics. There will never be more than 21 million Bitcoins. That is the absolute ceiling. Now, consider there are over 8 billion people on Earth. If we distributed the supply evenly, each person would get roughly 0.002 BTC. Owning a whole coin is mathematically impossible for the masses, even securing just zero. One Bitcoin puts you vastly ahead, securing a significant slice of the pie that 99% of the global population can simply never access. Visualize the network not as code, but as a finite amount of prime real estate in a dense global city where no new land can ever be created. Owning 0.1 BTC is not like buying a brick. It is like securing a city block in the only financial center that matters. While central banks are busy building infinite suburbs of fiat currency that stretch into the horizon, you are locking down property in the city center. The land is fixed, but the crowd wanting to enter is growing exponentially every single day. The situation is actually tighter than the raw numbers suggest. Millions of coins are lost forever, and millions more are locked in cold storage by institutions that will never sell. The available supply is shrinking rapidly. Holding zero. 1 BTC today places you in the top 1% of holders globally. You are not just an investor, you are becoming part of a new economic elite. You have secured a seat at the table before the rest of the world even realizes the room has a strictly maximum capacity. Treat your fraction with the respect it deserves. Do not look at it as a small trade to flip for profit. Look at it as a permanent claim on the scarcest asset humanity has ever discovered. You have the math on your side, but scarcity alone is not enough to explain the urgency. To understand why this asset is worth protecting at all costs, we must look at the crumbling foundation of the money you use every day and reveal the silent theft that has been stealing your life's work for decades. You have likely noticed that no matter how hard you work, the finish line keeps moving further away. You save money, but it buys less every year. This isn't bad luck. It is a feature of the system. Most people believe money is a stable ruler to measure value, but that ruler is shrinking in your hands. You feel the anxiety of running on a treadmill that speeds up daily, yet you were never taught why the ground beneath you is crumbling. It starts with a lie we accepted long ago. In 1971, the link between the dollar and gold was severed, turning money into nothing more than a promise from politicians. Since then, inflation has not been about rising prices. It is the silent theft of your time. Every time a central bank prints money, they dilute your labor. They are stealing the hours you worked yesterday to fund their mistakes today. It is a subtle form of slavery where your energy is siphoned off, leaving you with currency that bleeds value relentlessly. Think of your fiat savings like an ice cube sitting in the hot sun. You can protect it, hide it, or bank it, but the laws of economics guarantee it will melt away. Bitcoin is the absolute opposite. It is a battery that stores your life force without leaking. It is a vault made of mathematics, not politics. When you convert your labor into Bitcoin, you are freezing that energy in an incorruptible block of amber that no government can ever melt down or debase for their own gain. History shows us exactly where this road ends. From the Weimar Republic to modern-day Argentina or Venezuela, every fiat currency eventually returns to its intrinsic value, zero. We are watching the slow-motion collapse of trust in sovereign debt. This is why visionaries like Michael Saylor view Bitcoin as the ultimate asymmetric bet. It is not just about the price going up, it is about the denominator, fiat money, collapsing against the only immutable constant we have left, holding zero. One Bitcoin is your personal shield against this inevitable decay. You are opting out of a rigged game and stepping into a system where the rules cannot be changed to hurt you. By securing your fraction now, you are preserving your past efforts for the future. But understanding why Bitcoin is valuable is only half the picture. You must now understand the specific event that forces this value to explode. A programmed shock that the market never sees coming until it is too late. You might find yourself staring at the charts, paralyzed by the fear of buying at the wrong moment. You wonder if the price is too high or if you should wait for a dip that may never come. This anxiety stems from looking at the daily noise instead of the mechanical reality. The market feels chaotic, but underneath the volatility, there is a programmed clock ticking down. It doesn't care about your hesitation or the news cycle. It only cares about a schedule that is about to restrict everything. Every 4 years, the network triggers a ruthless event known as the halving. The reward for miners is slashed by 50%, instantly drying up the flow of new coins entering the market. This is the only asset in history where supply issuance drops regardless of how high demand goes. In any other industry, high prices lead to more production. Here, the protocol tightens the faucet just as the world gets thirsty. It is a perfect storm of basic economics designed to punish those who wait. Imagine a massive stadium with a single, narrowing entrance. For years, the doors were wide open, allowing anyone to walk in freely. Now the doors are slowly closing, inch by inch. Inside, the seats are finite, but outside, the line of people wanting to enter is stretching for miles. You are currently standing at the threshold with a chance to slip through. Waiting even a moment longer means fighting through a panicked crowd just to get a glimpse of what you could have easily owned today. The crowd outside that stadium is no longer just retail speculators. We are witnessing the arrival of giants. BlackRock, ETFs, and sovereign nations are quietly positioning themselves to absorb the shock. They are not buying with lunch money, they are allocating billions. When these entities move, they do not just buy dips, they consume entire order books. The supply shock we face is not theoretical. It is the mathematical inevitability of infinite fiat capital chasing strictly finite property. This leaves you with a clear, albeit urgent, choice. You can act now while the supply is accessible, or wait until the scarcity becomes obvious to everyone. Accumulating your 0.1 Bitcoin today is not speculation. It is front-running the greatest capital migration in history. The window is closing, and logic dictates you secure your position before the math makes it impossible. But to truly commit, you must understand the final mindset shift that separates the lucky from the visionary. At the start of this conversation, owning a fraction of a Bitcoin might have felt like a consolation prize. Now you understand it is actually a ticket to the lifeboat. We have stripped away the noise of the price tag and looked directly at the mechanics of absolute scarcity. You no longer see a volatile asset, you see a mathematical certainty. You possess the knowledge that separates the anxious speculator from the calculated investor who knows exactly what he holds. Years from now, when the supply shock has fully played out, the world will tell you that you were simply lucky to get in early. But you will know the truth. It was not luck, it was vision. While the majority was distracted by fleeting trends and empty promises, you chose to study the fundamentals. True freedom is never given. It is silently constructed by those with the discipline to act when others hesitate. This fraction is your declaration of financial independence. The landscape of money is changing faster than most can comprehend. If you value this level of clarity and want to navigate the coming storm with a clear head, consider joining this channel. We do not chase hype here, we focus on the signal that others ignore. Make sure you are subscribed so you never miss the strategic insights required to protect what you build. The future belongs to those who prepare for it today. Secure your position, and I will see you in the next one.